Another thing that I was kind of messing around with yesterday, I'm gonna have to bring up my note, my sticky note. There is a let me see it, USS FHP. Okay, so this ticker symbol here is U.S. single family home prices. Single family home prices. So the data goes all the way back to 1968. Boom. There you go. So all the way back to 1968. So this is what single family home prices have done over what the past 40 third hold on. I can do math. What is that? 54 years or so, 55 years, something like that. So it's been a while. It's been a while. We've got a pretty good amount of data. So Bach, what's going on? So the single family home prices, obviously, I mean, it's pretty easy to understand what this tracks single family home prices. What's rather interesting is I always like to kind of see how things kind of compare. And the really easy thing to kind of compare this to is, well, the SP 500. So I'm going to do that. I'm going to compare that to the SPX. SPX divided by boom. And this is, well, what the S&P 500 compared to single family home prices have done. So the way to kind of read this, let me get a text box. SPX outperforms homes outperform. All right. There we go. Okay, boom. And then give me some arrows. Make this cool and fancy. Arrow marker. I don't want arrow marker up. Boom. Make that. Can I make that bar bigger? Can I make that bigger? How in the hell? Alright, I'll tell you what. Give me my marker. I ain't got time to mess around with you stuff. Alright, so SPX outperforms. So if the asset, I don't even know what this is going to be, but we're just going to color that in. Boom. SPX outperforms if this goes up. If this goes down, homes outperform. Okay? So what you want to understand here, simple fact, equities outperform homes in the long run. And this is not even taking into account property taxes and other things like that. I would say just taxes in general on both assets, but homes have a huge underperformance also factor with property taxes, because every year you got to pay property taxes depending upon where you live and how much that's going to be. So during these down moves here in the early 70s, homes were actually outpaced the S&P 500. Not too often in history where that's happened. And then most of the time, though, the S&P 500 has outpaced home values. So that's kind of interesting to see. We actually saw home prices actually outperform the S&P 500 in the first half of last year, right here in this nice little pullback. Also in COVID, nice little pullback. Obviously, the great financial crisis and real estate collapse. Obviously, the S&P 500 underperformed. Everybody's like, well, I thought it was the housing crisis. No, that was a lot more than just the housing crisis. And then obviously the tech bubble bust. The S&P 500 definitely underperformed pretty well. So this is, if you want to know kind of what I'm getting at here and what I think would be very good to do is if you own rental properties or real estate investments and stuff like that, non-REITs like physical property, I would sell, and I think I would just go into the SP 500. So that's just kind of what I was just wanted to show off, because we've had a period of very low interest rates, low interest rate environment that have really kind of benefited homes. And I think it's one of those that, since we're no longer in that low interest rate environment, I can still see the S&P 500 continuing to outperform homes going forward for a good period of time. So that is how you would want to read this. As long as you set it up this way, the S&P 500, SPX, divided by the USSF HP, which is U.S. single family home prices. So, yeah, very interesting look here of what you'd want to invest in, property or stocks.